Tesla stock is soaring over 4% today, and I'm sure you guys know exactly why. Inflation came in almost spot on our estimates here on the channel. Wall Street was not expecting this number, and it's really fueling a broader market rally today. But Tesla also has Tesla-specific news, including Tesla's raising prices in China for the lowest end variants of the Model 3 and the Model Y. This is exciting some individuals on Wall Street and is another good reason why Tesla is soaring today. We're going to break all of this news down. There's a lot more news, including your weekly delivery numbers out of China that you need to know. We're also going to get into what in the world is going on with Tesla options. What are the shorts looking like? Short sellers are taking a beating over the last 2 days, and I think it could get a whole lot worse for the short sellers. And we're going to look at the charts. Where is Tesla stock going next? What do the charts support? Before we get into it, hit that like button and subscribe to the channel because they are free 99. It costs you absolutely nothing to do. And let's go ahead and get into it. Let's start this video with some of your biggest Tesla specific news, and then we'll get into this CPI report. First up, Tesla has increased the price of the Model Y rear-wheel drive in China by 25,000 yuan, equaling 355 US dollars, and there was no other price changes to other Model Y variants. Tesla also increased the price of the Model 3 rear-wheel drive in China by 1,500 yuan, about 206 US dollars, and again, there was no other changes for other variants for the Model 3. This is specifically encouraging because if Tesla's raising prices on the lowest end models that they have, that's a pretty good sign. You're probably seeing really good demand for the entire Tesla lineup. And these are, as I should note, the most popular vehicles in China, the Model Y and then the Model 3. At least the most popular vehicles that Tesla offers in China. Between November 6th and November 12th, Tesla China insured 13,000 new Teslas. Comparing this to the same week or same time period as last year, you're pretty much unchanged. Last year, you had 13,939 vehicle registrations for this same week. So this is not exactly super great, but it's not a terrible number at the same time. Tesla is on its way to double components imports from India. The Indian Trade Minister GRAIL said today. This looks like yet again another step towards actually seeing vehicles from Tesla being sold in India. The Indian market specifically would be perfect for your Model 2 variant, your lower priced Tesla, smaller, more compact with maybe a little bit less range, but ultimately is more affordable to as many Indians as possible. That would be a big seller potentially over in India. And that's presumably, well, what an India manufacturing facility would manufacture. But this Indian factory, presumably when that happens, could also open the door to three-wheelers and other more third-world vehicles. And just imagine how much that would increase Tesla's TAM, total addressable market. This is all great news for Tesla, and I look at it like the sprinkles or the cherry on top of the sundae. The ice cream and the whipped cream today, well, that is your CPI report. And we were yet again almost spot on with our estimates for CPI. Core inflation, I estimated, would come in at 0.2% month over month, and we came in at 0.2% month over month. I estimated 3.9% for core year over year. You actually came in at 4%. So a little bit hotter than my estimates, but this was really a rounding effect. If you look at things individually, you were really closer to breaking under 3.9%. So that's looking good. Core across the board, better than expectations. Month over month inflation was expected at 0.1%. We thought 0.1% was respectable. That's probably where we would come in, but it wouldn't have surprised me to see a 0% month-over-month reading. And in fact, we did come in at 0% month-over-month. Your inflation rate year over year came in a little bit better than expectations as well. The expectation from Wall Street was 3.3%, and we came in at 3.2%. So everything across the board came in better than expectations. And a big reason why Wall Street is excited about this inflation report is, number one, month-over-month headline coming in at 0% is big news. That's a big deal. But also your core year over year is now hitting a 2-year low. So the Fed is accomplishing their goal, but also you're not seeing in your unemployment rate, your economy deteriorating. The soft landing narrative looks more likely now than it ever did in the past. That's why tomorrow's retail sales data is going to be very important. But we already have a heads up that that's going to come in slightly negative. I'll share that data and information with you, my estimates for retail sales, coming out in the video later on tonight, probably around 8:30 or so. So make sure you guys are staying tuned to the channel for that one. Tesla stock is currently up 4.65% and could actually continue higher throughout the remainder of the day today. It would not surprise me to see Tesla stock up over 5.5% by the time you guys are watching this video. The option activity is very bullish. Today, you have seen 1,000 hedge fund and institutional trades totaling $216 million with a positive order value of 71%. This is almost 100% better or more bullish than what you've seen last week. Last week's positive order value was around 37%. And this is obvious. Inflation's coming down, the economy is holding up. Tesla is the prime beneficiary of that. There is no other company that benefits more from a soft landing than Tesla. Soft landing means Tesla potential buyers, right? Balance sheets of households remain intact so they can buy Teslas, but also lower rates so more people can buy more Teslas. And as long as people are employed and rates go lower, that opens up Tesla's total addressable market. Not to mention, Tesla is self-financed, a very high-quality company, but is also growing a lot. So Tesla's growth incentives or initiatives are going to be a little bit cheaper to maybe make that factory in Mexico. And maybe that really kickstarts the actual construction of that factory. Elon Musk said very clearly on the last earnings call, he wants to see rates head down before they start construction. The volume today in the options market for Tesla is also very positive. Out of the total percentage of option activity, which is 100%, 61% of which are calls and 39% of which are puts. Almost 2 times as many calls are being bought today compared to puts. That is another good sign that Tesla stock is probably going higher from here. This is one reason why Tesla stock could be going higher over the next couple of weeks from here. I've said it many times before. I'm tactically bullish from now until likely the end of the year unless something changes. We've gotten big tech earnings out the way. We got the Fed out the way. Now we got CPI out the way. Retail sales tomorrow. I mean, there's really not much left that is going to destroy this rally, and all of those things have come in better than expectations. Earnings, better than feared or better than expectations. The Fed was more dovish than expectations. CPI was better than expectations. Retail sales probably going to come in a little weaker than expectations, which is good news for Fed policy and good news for stocks. But there's another reason why Tesla stock could go higher from here over the next couple of weeks, potentially even see a short squeeze. Because of all of those things I just mentioned, plus the estimates for Tesla are way too low. I think the markets are way too pessimistic on Tesla for 2024. Tesla might actually raise prices in 2024 as rates go lower. And that's the simple fact of the matter. Tesla is in the best position to benefit from rates going down. Wall Street is likely to position for that right now and over the next coming month or two. Before 2024 ever starts, you're going to see people position for rates going lower. And you can actually see that in the Fed Rate Monitor tool, looking at how investors are essentially betting on Fed policy. 10-year Treasury yields are dropping almost 17 basis points today. That means your Fed fund futures have drastically changed. So December 13th, there is now a 100% chance of a continued pause from the Fed. Yesterday, there was a 20% chance of a rate hike in December. For January, there is a 100% chance of the Fed continuing to hold. As of yesterday, there was 28.3% chance of a rate hike in January. There was a 2.8% chance that we got 2 rate hikes, one in December and one in January. Both of those are gone. There is 0% chance that we get a rate hike for December or for January. There is now a 28% chance that the Fed cuts rates by March. Yesterday, this was 9.6%. And there is a 72% chance that the Fed continues to pause. As of yesterday, there was almost a 25% chance the Fed raises rates. So yesterday, there's a 25% chance the Fed raises rates and a 9% chance the Fed cuts rates by March. Now, there's a 0% chance the Fed raises rates by March at all. And there is a 28% chance the Fed actually cuts rates. So not only have you fully priced out the chance of a rate hike in March, you're now pricing in a greater chance of a rate cut in March than you were yesterday pricing in a rate hike. That's actually insane when you think about this logically. That's a good reason why stocks are going higher. And now you have the first official rate cut priced in for May 1st, 2024. There is a 58.8% chance of a rate cut May 1st. Yesterday, the odds were about 50-50. 40.9% chance yesterday of a rate cut and 40.7% chance of a rate cut and 40.9% chance of a continued pause. Now there is an almost 20% probability of 2 rate cuts by March or by May. Yesterday, there was only a 5% chance of 2 rate cuts by May. So if you get some weak retail sales tomorrow and you continue to get data that supports the Fed should cut rates, maybe another data report or two, well, you could start pricing in 2 rate cuts by May 1st. That means the markets might not have as much time as they thought before rate cuts. That means they have to start heavily positioning in stocks that will benefit from rates going lower. Fed Goolsbee says housing will be key to further inflation progress. He also says there's always some bumps in the road as inflation comes down. These comments are being taken as bullish from the markets. Let's now get into the rest of your Tesla stock news that you need to know on the day today, and then we're going to circle back to look at the chart for Tesla and where Tesla stock could be going next. But first, Nick Timiraos, widely seen as the Fed's mouthpiece, gives his opinion on this latest CPI report. He says, quote, "The October payroll report and inflation report strongly suggest the Fed's last rate rise was in July. The big debate at the next Fed meeting is shaping up to be over whether and how to modify the post-meeting statement to reflect the obvious. The central bank is on hold." And this is a chart depicting core goods, core services ex housing, core CPI, and housing. I mean, housing is really the only thing that's still stubbornly high. Core services ex housing continues to fall as well. This across the board was very encouraging today. And as we have talked about many times, housing is really a problem the Fed cannot fix. There is a supply-demand imbalance here. Just for context, in 1960, there was around 165 million people living in the US, and we were building about 1.5 million homes a year. Some years more, some years less. This last year, we built about 1.2 million homes, so less than 1960, and the population, via the last census, was around 340 million people, let alone all of the immigration we have seen over the past couple of years. That number could be as high as 400 million people. There's just not enough housing. And I think the Fed knows that and will ultimately realize that, and that will not stop rates from going lower. Even so, perversely, the way that you potentially fix housing inflation is by lowering rates so more people build more homes, or maybe even incentivize people to build homes. India's Minister of Commerce and Industry visited Tesla's Fremont factory today. Democratic Senator Joe Manchin urged the U.S. Treasury today to adopt, quote, the strictest possible standards to prevent Chinese-produced minerals or Chinese battery companies from winning electric vehicle tax credits. Fisker reported a Q3 loss that was wider than Wall Street expected and said they delivered only 1,100 Ocean electric SUVs in Q3. The net loss was $91 million or 27 cents per share versus a 19-cent loss per share, which was the estimate. Revenue came in at $71.8 million versus $109 million for the estimate, and they have $625 million in cash. Prime Minister of Thailand visited Tesla's Fremont factory as well today. The Prime Minister said, quote, it is my hope that this collaboration will cement Thailand as the hub for EV and renewable energy in the years to come. Tesla China has released a new photo of owners taking ownership of their new Model 3 Highlands. The designer of the DeLorean said on the Cybertruck, quote, when you step outside the norms, it's almost always seen as a provocation. The Cybertruck will surely be successful. I'm sure of it. I'm convinced it will find its admirers. And I would reckon that is the case considering the Cybertruck has 2 million pre-orders. IF Metal is offering Tesla Sweden employees compensation to join its strike against the company. The union is offering employees 130% more than Tesla's salary. And yet, this is just not affecting Tesla stock today. Tesla has also removed all language from the page that said you can't resell/flip your Cybertruck within 1 year of delivery. Gary Black writes on X, Tesla bulls should reduce their expectations that Tesla volumes can grow at 50% per year. I am at 37% volume growth in 2023 and 37% growth in 2024. Wall Street is at 37% in 2023 and 22% in 2024. And apparently, Martin Visha, head of Tesla IR, recently advised investors that Tesla, quote, is now in an intermediate low growth period at a recent Deutsche Bank auto conference with institutional investors. 35 to 40% volume growth still translates to 30 to 40% EPS growth, which justifies a 60 to 70 times 2024 price to earnings, which would put Tesla in between 240 and 280 at a normal mega cap growth 2024 peg of 1.7x. The thing that they're really missing, in my opinion, is Tesla is going to raise prices big time in 2024. That's something Gary Black, Gene Munster, Dan Ives, Adam Jonas, nobody is expecting. That is the ultimate checkmate that is coming for 2024. Well, Martin Visha responded to this 27 minutes ago and says, what I said specifically is that we're between two major growth waves. The first driven by 3 and Y platform since 2017, and the next one that will be driven by the next gen vehicle. So it's kind of like they're in a growth transition phase. Goldman Sachs said this today on Tesla, quote, "We believe in an upside case, FSD could be 50 to 100 billion a year of revenue from Tesla's fleet by 2030, up from what we believe is 1 to 3 billion per year presently." Let me just put this into a little bit of context. 50 billion is about half of Tesla's total revenue for this year. 100 billion would be around Tesla's total revenue number for this year. I believe it might come in like 120 billion or so, but call it roughly $100 billion. If there truly is a 90% roughly margin on that, I mean, you're going to be looking at some insane numbers here. Times that by 0.90. Obviously 90 billion of net profits, divide that by roughly 3.3 billion shares that are outstanding, and you're looking at an EPS that, just simple math here, would benefit about $3 a year off of FSD alone, not including Tesla's energy business, not including anything else. So if that were to happen by 2030, you're looking at Tesla's share price in the thousands of dollars. As I have said before, when rates go down, Wall Street can look out at growth companies and assign them a higher valuation. Because simply put, if you're investing in a 10-year bond at 5%, you're going to get 5% this year, next year, the year after that, 2028, 2029, and 2030. If you're looking at a 45-ish% return from now until 2040, well, you're going to put a lower, risk premium essentially on a Tesla, right? That is a little bit more uncertain. You never know what's going to happen to the economy. Maybe buying T-bills and chill could be the strategy at that point. Well, what if 10-year treasuries are 4% or 3%? Then it looks a lot more attractive to invest in something like a Tesla. And I think to some degree you are seeing some of that narrative playing out. The fact of the matter is Wall Street is way too pessimistic on Tesla stock. And if you look at the charts here in the short term, you see things that are very encouraging. Take a look at this Wyckoff candlestick wick. This is showing the lowest point of the day today, which was $231 per share. What did investors do? They came in and bought that up. Now you're close to the high of the day, and I'm sure you'll close even higher than where we are now and continue to trend upwards. Whenever you get these wicks, that tends to be a really good point to go long in Tesla. Look at this wick back here. On September 27th. That was when Tesla stock hit a low of $234. Tesla proceeded to rally to about $270, right? Anytime you point these wicks out back here on August 18th, that was at $212. Tesla stock proceeded to rally to about $280, right? Almost any time you get these wicks, you usually want to be long. And that's happening yet again today on a day where Tesla stock is up 5%. If that doesn't make sense, long kind of answer is Tesla's probably going higher from here. Now, you will fill the gap at about 242. So I think that is almost a certainty at this point. If retail sales comes out the way I think it will, again, we're going to go over that. Around 8:30 p.m. today, that video might come out in between then and 9. We'll just have to wait and see. In that 30-minute period, then Tesla stock could go even much higher than that. Now, you're going to meet your downtrending line of resistance right at about 250. If you break above 250, that's where things could get much more bullish from here. If you look at the RSI, that is at 56.21. So there is a lot of room to make that upside run to 70 or higher. So you're not overbought at all, considering Tesla has went up from 192 or so to 235. You would think the stock would be somewhat overbought at this point. You're basically neutral. Yeah, you could see a lot more gains from here. Just my personal opinion. And my price target was in between 240 and 250, and you're already pretty close to that, and today is Tuesday. So, exciting things happening throughout the rest of this week. I recommend that you guys subscribe to the channel so you guys can get this information as soon as possible and hopefully help you make more money. That is the ultimate goal. That is the reason why you are watching these videos. If you do watch these videos, then this information has surely helped you make more money already. So come join us if you guys have not done so already. Hit the like button, because it's free 99. It costs you absolutely nothing to do, as well as comment down below what do you guys think about all of this information. Nonetheless, that is going to do it for this video. If you guys want to come trade with us live in real time, I put on 2 specific trades today. One of them, which is really just a swing trade. Another one of them is for target earnings tomorrow. If you guys want to see those trades, come get involved with the community over there. Link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.